Hi traders, and welcome to the latest edition of the Keyzone Traders Trade of the Week. Now the markets have been quite volatile recently, which obviously creates some opportunities for us as traders. So this week I'm going to look at a trade that we've taken just this morning, which is Friday, on the FTSE. Now it was with trend, which you should be looking to trade as much with trend as possible when you are in these volatile markets. But it's also going to show the importance of, even when you're trading with the trend and you're going for higher risk to reward trades, it's still really important to identify the areas in the market that you need to still manage those trades from and manage your risk from. So with all of that said, let's go take a look at the charts. Hi there traders, so we're going to look at a trade that we took on the FTSE this morning, and as I said, the markets are very volatile at the moment. So we said here that the bit I want to just concentrate on at the moment is we said if we saw a sustained break below 70.39 to 70.51, then this can see moves towards 69.65 to 69.80. So now let's go and have a look at the FTSE chart and see what we did. Okay, so this we was trading around this 70.39 to 70.51 zone, which we had mentioned in the report in the morning. And notice we've got this really strong impulsive push down and a slightly corrective pullback. That was 1, 2, 3, 4, 5, 6 candles, which it took 6 candles to retrace those two candles move down. We then started to see this sort of continuation pattern. Now, it wasn't completely clean, but we had this sort of like move below the zone, and we were starting to hold this zone as resistance on the retest. So what I'm therefore thinking is, and I said if we got the sustained break below this zone, then we could see moves all the way down here to this zone of support down here. So that's with trend, because we know at the moment the market is quite bearish. We've had some big selling off in the global indices in the last couple of weeks. So with that in mind, as soon as I saw this strong close back below that zone, that suggests to me that I've got that sustained break below. We've tried to break through once, we've had the corrective pullback, and now we're getting some momentum back below the zone. If this was a false break, I would have expected this to have held that zone and then pushed higher, or even on this push up, I would have expected it to push higher quicker as well, and then hold this on a retest. But it's not holding the zone on a retest, therefore I'm looking to short the market as per my analysis and my report this morning. So with that said, you can enter at 70.33, which is a break of that candle, but you want to have your stop above this high here. So the high there was 70.56, so you have your stop at sort of 70.58 there. Now, so you've got a 25-point stop, excuse me, and we can target down towards this zone here. Now, we went for a 50, with a 25-point stop, we went for a 50-point target to give us a 2-to-1 risk to reward. And as you can see, that just would have front run that zone, allowing for any front run of that zone there. So we've got a nice risk to reward trade. But just notice, however, we have this zone here. Now, although we didn't mention it in our report, it is a zone that we've marked as potentially there could be a reaction from. So what we do there is, even though we're with trend, so if this was against trend, we would just be going for a 1-to-1 trade. We'd be looking to profit here, book our profits here, be aggressive with our risk management, take our profits and run. Basically, that's what you should be doing when you're trading counter trend in the markets. But because we're with trend, we're going for a higher probability, a higher risk to reward. We get triggered into the trade. We take a little bit of heat, but then we get some really strong downside momentum, which is great for the trade. We're with trend. We get the continuation. However, even though we're still expecting the market to move down into this support zone down here, because we've identified an area in the market, and I can show you this was on the report as well, even though it wasn't actually discussed in the write-up of the report, you can actually see this this here at 7,005 to 7,015 is mentioned in the report as an area that we need to keep an eye on. So what we do is we manage our risk in this area. We scale out of our position. We take 50% of our profits at sort of, what is that, about plus 20. We move our stop down so that now the stop is above that zone as well. So if we get a strong push back above the zone, one, the trade is wrong because we've already had the reaction from that zone. So if it started accepting back above the zone, we're wrong. But also, if that happens, we don't lose anything on the trade. So the market's moving in our favour. We're still looking to take the trade down to that a full target with the trend. But if we're wrong, we now don't lose any money. We're completely risk-free on the trade. We will make nothing, but we also will lose nothing. So managing your risk is vitally important. And what ends up happening is it actually does end up having a really strong reaction from this minor zone that we had identified in the report, and it stopped us out. And you can now see that created a clear false break pattern. So that's why our analysis around this zone was right, but it didn't actually get the full hit the full target. But by being able to identify those areas that we can manage the risk from and managing that risk, we actually turned what could potentially have been a losing trade into a break-even trade. So it's a really vital lesson that even when you're with trend, it's still vitally important to understand and identify and be able to identify the areas in the market, and it's still essential, as it is with any trade in any market conditions, to make sure that your risk management is on point and you have strategies, clear and defined strategies on how to risk manage your trades, as that is the thing that keeps you in trading for the long term. So I hope you found this session useful, and the review of this trade that we took very useful. I hope you have a great weekend, and I will speak to you again next week.